Good morning, Dzień dobry. All right, so we're back again today. Official stream number 2. So just getting ready here for London Open. Um, Welcome back. If you joined me yesterday, appreciate the watch, and for all the people that viewed the first video, thank you very, very much. And had some new subscribers also, so that was nice. So thank you. Um, the first video I did was extremely detailed, I think, in terms of my strategy and what I like to do on a day-to-day basis. So I'll continue that process today, but maybe not so much in detail, not so much talking about a lot of things, but continuing to point things out. And if I do see some stuff, um, any kind of questions or anything, I can definitely answer that as we go along. Okay. So first thing, following my normal routine for the day, is news. So there was news about an hour ago that was on the European Open, and that was German GDP. Didn't really do a whole lot. So um, we're news free as of right now, unless we get a Trump tweet or something else in the world. Um, so that's the news. In terms of higher time frame buys, we'll start there first. So um, this was yesterday on the daily. This big black candle down. It did push below this green candle here. So we are currently our bias overall is up, but the internal smaller move right now is still down, and it'll continue that way until we get a daily candle close above a previous day and start to maybe move up. So right now, even though we're looking bullish, it's still down until the chart says something different. Um, so we're going to continue to watch that. So let's look at the 4 hour. So a lot of this is very similar to yesterday. You can see, I talked about yesterday, we had that um, big move down. This was an area we were watching here. But this recent move down on the 4 hour, um, you got a couple, if you want to call them legs. You got a push down here, another push down here. So what are we doing right now? Well, we have come back up to this 4 hour gap. This 4 hour gap was tested yesterday in New York. You can see beautiful reaction off that 4 hour gap right at the 50% line. And I think I was talking yesterday about the 4 hour, like the 1 hour, 30-minute daily 4 hour gaps in particular. I like to look for reactions off of those, not necessarily a inverse fair value gap right away where price blows right through it and then it goes up to the top. With the higher time frame fair value gaps, I'm looking for more reaction, especially if it hasn't been touched yet, and this one wasn't. So now, looking at this one, because this candle did touch, it did go to the halfway point, 50%, and move down. I've already had one reaction out of here. So, what's my expectations now? I wouldn't put a whole lot of faith in this still holding, but the buyers still have to get above and beyond this fair value gap to see it push up. And in my eyes, looking at this, I'm still in a down move until buyers can get kind of above this area rating here. Make a little circle, kind of in this area. So you'd want to see a candle come up, close above this area. And then you've got two areas where the buyers have kind of gone past the sellers and then I think start to establish more control on the chart. So daily still tells me momentum down. 4 hour, we're kind of in that unsure part. Uh, could be up, could be down, but I have to go higher time frame here. Uh, so let's look at the hourly chart. I'll make this a little bit bigger. So you can see the last four hours or so, market's been steadily moving up since about midnight. So what have we done here? You know, we have cleared this big push here. So as we start to move down to lower time frames, it starts to tell a little bit different story to me, you know, because usually, well, and a change of price or change of movement is going to happen smaller time frame first, of course, which will kind of ripple its way up to higher time frame. So I can see that starting to happen here. This big push down. Well, we just got above that last hour. And now this is going to be important because this candle right here, the high of this candle, which we're looking at right now, last hour we wicked above it, but we closed below it. Now it's going to be important to see, does this first hour of London continue that? You know, do we get a close above this area? That's going to be really important to see. Or is it just a wick out, a fake breakout, and then we're going to move back down to the low? So we really have to monitor this. We have to watch this first hour, see how it all pans out and what it gives us. Okay, so yeah, 1 hour. Like I said, we have started to move above this, so we really need to watch that because this is showing maybe a little bit different story. The other area that I'd be looking at would be around this area, which could be very important. And you know, I mentioned yesterday how the Asia Opens, which are the yellow lines. So this is yesterday up here. This is today down here. And then the previous day close, which is that purple line here, purple line down here. New York loves to revisit those areas. And you can see yesterday, so if I go to the 1 hour candle of yesterday, which was the this big push down. So you can see New York pushed down, but they never came back up and touched this area. New York loves to come back and touch this area. And if it doesn't happen, a lot of times it's going to happen like a day or two after. So it's always kind of interesting to watch that. Is it a strategy you could take and trade? That could be tough because you don't ever really know when the price is going to come back up to those areas. So, but the same thing is will set up down here too. You know, you've got the yellow, which is Asia Open, purple, yesterday's close. You know, London has pushed up, and that's the thing too. London likes to touch those areas also. So I wouldn't be surprised if London comes back, hangs out at this line. Seen that time and time again. And I think when we look at some of the other time frames, you'll see that this area is also, you see a lot of sideways movement. You can look at the chart without even looking at the volume profile. You know all this sideways move that the volume profile POC, point of control, where the most contracts have been traded, it's going to be down in this area somewhere. And so watching price here at the high, and like I said, this 1 hour is going to be very important. You know, we've got a fair value gap here. Does that hold? Does price break through and make that an inverse? If it makes that an inverse, you know, then I think first targets are going to be like the pivot point for the day. Um, the POC, which I'll get into in a minute. Asia open and previous day close. So there's lots of key levels down below us. All right, let's look at the 30-minute. So 30-minute, as you know, has a lot more information on there, has all the option information. You can see based on yesterday's volume profile POC and today so far, they're very close to each other. So that really starts to tell me we're more ranging, more consolidating so far in the market, um, which means no real trending yet. All right, let's see. Anything that we can take away here? We do have a small fair value gap on the 30-minute. These blue shaded areas on that indicator show like order block type setups. You know, do I take those? Sometimes maybe if we get good clear pushes away from those areas. But we'll have to see, because another key for me is, are these created with lots of volume? And you can see, if you look at the volume profile, like I talked about yesterday, you've got the main area of volume on the chart so far here, which is your value area high, value area low. 68% of the trading today has occurred here. POC's right here in the middle. So we're kind of floating here at the top where there's not a ton of volume. And if you look at yesterday, we're in yesterday's area above value area high. So technically, if I look at today and I look at yesterday, we're kind of in that expensive area. Anything above value area high, we're expensive. People want to sell it. So would I be surprised if it wants to come back down and, you know, maybe revisit an area down here? Nope. You know, London can definitely range, can definitely pull back down and just go sideways for a while. So, all right. So half hour, not really seeing too much that, you know, I would really hang my hat on and say, oh, I got to trade that. If anything, one area I don't mind is more up in this area. Let me get my circle back out here. Is this area up in here? The reason why I like this one, well, you've got kind of like this order block area here. You got a fair value gap. You got a good push away from it. Momentum down. You know, it's an untouched fair value gap on a little bit higher time frame, 30-minute. So that's probably an area, this one right here, I probably look at for some type of reaction out of. Now that's quite a bit of strength coming down. It's not a lot of volume though, but we did consolidate up here quite a bit yesterday. So let's go ahead and mark that one out. Put it as 30-minute. So I've got that on the other charts and I can kind of keep track of that. So 30-minute doesn't really tell me too much, like I said, for areas. Yeah, we got a big push up, but I'm not really seeing that clean move quite yet. So revisit the 1 hour on this move up. I don't really see anything exciting. Let's see. 4 hour. Let's take a look here at this one. You know, it's going to be kind of hard to tell on 4 hour at this point for me. So I need to just kind of wait and see on the higher time frame. So we'll go back to the 30-minute. Make sure I've got this set up for all my charts. That way I've got it showing up on everything. So we can kind of clearly see how that plays out across all the different charts. Okay, so let's go to the 15-minute. All right, so 15-minute, what does that tell me? All right, so we had the big push up, which is shown here on the 30-minute and higher time frame. A couple areas on the 15-minute that look a little bit better to me. On the 30-minute, it's going to be down here. On the 15-minute, we're in this area. Fair value gap, another fair value gap, another fair value gap. This one's already been tapped into. Not super excited about that one. This one hasn't. Okay. But this one could be a little dicey. If I looked at this one, which if I have to match these up, let me go to my circle here. So this area right here is also this area on the 30-minute. Okay, so 30-minute, yeah, we clearly got to push up and out. Price retrace back in, and it has been moving up, right? Okay, so on the 15-minute, there is a fair value gap in here, right? That has not been touched, but one super cautionary thing I didn't talk about yesterday is, and you probably noticed this from looking at charts. So the POC, the point of control, where the most contracts have been traded. If you look really on any chart where this is going to occur, like this is 5-minute chart here, and this is probably a good example. So same chart for today. Here's the volume profile, maybe looks a little bit different. If I zoom into this point of control, you can clearly see what's the price action like around the point of control. It's up, down, no real direction, no real movement. Both sides getting taken. It's very tight consolidation. So if you start taking trades anywhere in the area, can you really count on something working? It could absolutely work. But it's almost like a red flag. It's like, warning, you get into this area and price becomes not very predictable. And it's not that you can predict the market anyway, but when it gets into these areas, it's almost like a gamble. And you can clearly see, like when you look at this on the 5-minute, this starts to push down. You think, oh, it's going down. Nope, straight up. And then it pushes up, and you're thinking, all right, it's finally going to go up. And what happens? It comes right back down. And then you're thinking, oh, maybe it's a sell. Nope, it comes right back up. And then right back down. And then right back up. And this time it finally moves up and out. So if you're like breakout trading, you're going to get destroyed in this kind of action. So, once it gets into this area, you almost have to switch the mindset and go for the consolidation type trading. And, am I the best at that? No, not really. But what I'd like to do is just, I'll take like a rectangle, and as it starts to build out, I'll just start drawing boxes like around most of the price action, and anytime, the price, if I go back here, let me zoom in. So start drawing a box around the price action, around the POC. And anytime you see a candle start to like peek out beyond that box and wick it, it's probably going to go to the other side. And, does it always work? No, not really. But you could target the other side of that price action box, or you could target the middle, target the POC, because you can see how many times the POC got touched here. It's so many you can't even count all of them. So, just some thoughts. So, let me go back to the 15-minute chart. So if price makes its way down here, although I I kind of like this area. The location's absolutely terrible. And the likelihood of my stop getting hit, which if I entered a trade, I would almost be taking it off of the Asia open line, which is that yellow line. Maybe I do get the reaction and push back up because at least for today, we've been moving up. But I wouldn't also be surprised that price kind of gets sucked into this area and starts to go sideways again, becomes very erratic, um, with no clear movement, and takes me out. And um, so you always have to be um, very observant and know where you are on the chart. So, and that's just a kind of a management thing as I'm looking at potential trades on the chart. What do I like? What do I see? Will I try this when it comes down here? Yeah, I probably will for this YouTube stream so you can kind of see, does it work? Does it not work? But it adds risk to the trade, right? If I kind of measure out, I would probably put my stop either down at this low or just beyond this fair value gap area, hoping that, that the rest of the fair value gap kind of holds. Would I want to put it down here? It's starting to add quite a bit of risk. So let's see. Let's just kind of measure this out. So if I go here, looking at about $90. We go a little bit lower, we're about 137, and that's for 1 micro. So it's possible. On the good side, is that I would be entering a trade with a little bit, I want to say like with a wall behind my stop. So some things that can cause really big reactions on the chart is that this blue line, which is a VWAP. Price likes to come back to the VWAP. It's like a magnet. Do I trade the VWAP? No. Will I have it as a potential target? Yeah, sometimes. But taking trades off the VWAP for me has always been a little bit dicey. So I don't always do that. So, knowing that price is attracted to the VWAP and can react off the VWAP, that's a little bit of a wall for me to protect me. And it's the same when it comes to, the Asia Open, yesterday's close, and the POC. There's the most volume traded today is right here. So for the price to eat through all this, get all the way down to my stop, yeah, it can happen. But it would take some work for the market to do that. So I feel like I have more odds in my favor taking a trade from this area if it was to come all the way down. And I know from past trading London markets that really at any time, market can zip down to the POC in really a matter of seconds. And let's see, how far away are we? If I measure my measure tool, so we're about a little over 100 points away, and that's nothing. I think yesterday when we were trading London, we had that one move. It went like 80 points in probably a few seconds. So 100-point dip to come back to the POC and then move up and away. Not out of the question. Probably no problem. So, all right. So really, when I look at the 15-minute for buy area, it's going to be in there. If I come up here where I marked out on the 30-minute, you can see where I marked out on the 30-minute, our fair value gap that was untouched was this whole area up here. You can see where I have this kind of region marked as 30-minute. When I look at the 15-minute, you can see the fair value gap's a little bit different, but it's also inside of that 30-minute fair value gap. So now I have two things, right? I got another reaction out of the 15-minute. I had a reaction out of the 30-minute. So, am I interested in this area? Yeah, really interested. for some type of reaction. I will probably not mark out the 30-minute, but I'll mark out the 15-minute. And I'm going to mark out the 50% of the 15 and also where it started, right? So in this situation for sell, if London pushes up, I'm going to look for some type of reaction from yesterday out of this area. You know, what are we looking at for risk here? Because I'd want to get above this area. You know, I got a lot of things up here on the option side that price is going to want to go touch. So I have to really watch this. Price is always attracted to this gamma max, which is where most of the options are trading for. Well, this would technically be yesterday's information, but still going to like this area. So I really would have to push above this move. So, you know, that's going to put me around 140. And if I average in, say I get one more contract in here, $85, you know. So, mentioned yesterday, you know, I'd like to keep my risk around 200. So for me, in order to stay within my budget for risk, instead of this area, which is 140, maybe I come here and I've got this one, it's about 112. And then I got another entry in here, 85. So I know if I take the 50% and I take this one that I'm measuring now, it keeps me below the $200 risk. So that's probably what I'll end up doing. But, you know, I have to really watch the market because, yeah, you have a good reaction out of here. But like I said earlier, not a lot of volume that created this, right? This was all created like Asia opened yesterday. So it's not really backed up with a lot of power. Um, you know, most of your power from yesterday is going to be around the New York Open. And, you know, it's funny because if you remember yesterday when we were trading London, the volume profile was very thin. And I know I was mentioning yesterday, I said, yeah, probably it'll all fill out by New York. And that's exactly what they were doing yesterday. It was really thin. Then London, you know, brought it back up and kind of kept it in this area and filled out that volume profile. Well, is it a perfect bell curve? No, not really. It looks kind of ugly. So now today, I could see the same thing kind of happen here, where London brings back down POC and kind of builds out this area with more volume, right? For New York, a good setup for New York. You know, they want a nice clean profile. Not surprised if everything comes back down to the POC, the VWAP, yesterday's close, and Asia Open, where all this important stuff is sitting here waiting. That could be the destination. So we're going to have to watch and see. And what does London actually do here? So we'll probably get more clues as time goes on here. So, all right. Look at my charts here. So I do have some other stuff going on here on other charts. So I just want to make sure everything's all good. Okay, everything looks fine. All right, let me get back to this. Okay, so we know now we've got this area up here to engage potential short with a reaction. And this area, you know, I would definitely probably look at my entry. Got to really zoom in here. You know, this is an untouched 15-minute fair value gap, right? So I've got basically there, I got a 50% there, and I've got where it was created right there. Okay, let's look at the risk on this one, because I definitely on this one, because this is a really junky zone in here, and I know the price can start to do weird things in here. I really need to get below at least this green candle that really started to make the move up, right? So I'm gonna go here, I'm gonna measure this out. Like around $100 to get below the green candle. If I move below the sellers, you know, I'm looking at about 115 on my risk tool. If I get down here, that's 90. So I go over little over 200 on this one. Okay. So what I would do to keep myself in the budget, because I'm super strict on that, I may have to go for the middle entry, go down here. That puts me at 102 and 90. So my entries for a buy, if it gets down here, reaction, it's going to be the middle one and last one, right? And it will be the same on the top when we measure this out. Be my middle entry and that top entry. All right. Okay, so just so it's clear, let me mark out, I'm gonna mark out this area down here. I'll mark it as like a 15-minute area that I'm interested in. But just know this is a pretty junky area down here. But, you know, I would still hope, because there's a lot of volume backing it up, it's kind of where this recent kind of push up has started. I would hope if price gets back down here, buyers step back in and start to push it back up. So, um, all right. So let's get out of there. Okay. Now let's take a look on 5 minute, and we can take a look at the areas that I was interested in on higher time frame. So we can start in our junky area first and see, is there some better areas to maybe look at in here? You know, my entries kind of max me out on my budget. So where are some other areas that maybe I can think about getting involved in that uh, maybe a little bit cheaper? Well, if I look on the chart, I got untouched fair value gap here. Right, this one here, big one, right? Which actually my middle entry, my last entry fall within this one. My expectation, honestly, is if the price gets into this area, it's gonna touch the POC. Uh, is it a guarantee? Nah, no. Uh, High likelihood, yes. Is it my expectation? Yes. So now I'm gonna look more in this area. And the only reason why I would look more in that area is it would help to reduce my risk, right? Because I'm looking at $200 to take this trade in an area I know it's pretty dicey. So one way to reduce a little bit of diciness is to um, see if you can get like a better entry built within here, right? So I got 15-minute kind of area I was interested in. But now I know if I go to a lower time frame, I've got another area that's pretty good. I'm backed up by a few things. Um, so now what I would do is I'm gonna kind of change my thought process on where I would probably get into the trade if it moves down. And um, I will mark this out with a little bit different line, but the two areas I really like, um, I've got this entry here, which was the um, 15-minute fair value gap ended here, but now I've got one on the 5 here, kind of the original one that kind of gave us a clue that, hey, maybe price is starting to go up. So this one's interesting to me. So I'd mark this one out in like white. So we've got that, you know, that way we can clearly see the lines where I'm interested in. I'm gonna mark out all three. So kind of this first area, the 50% of it, and where it started. And I'm kind of do the same thing here. I'm interested maybe only in this one because when you look at the POC, and I do this on purpose, you see it's a big line, right? Point of control, POC, is not a specific price. Yeah, it shows it on an indicator. POC 29,128.50. But just know, look at the price action around here. It's horrible. Um, so that point of control isn't exactly one spot, right? It's an area. So I would probably look for that area right there. Okay, so now I know that really my entries are going to be the white lines if it comes back down. And what did I do? So my original 15-minute, I was looking at 115 for one contract on a 15-minute, kind of expensive. But I think if I just eyeball this, I may be looking at about half the risk now. So let's see. My first entry here, about $70. So already in my head, I'm thinking, wow, I can almost get 3 contracts in this one, right? So if I enter one there, we'll just kind of do some general math. $71. If I enter one here, I'm at, we'll call it $56. So I'm at 127. I could go another one here, 40, we'll call it 49. So, I'm looking pretty good. I could get several entries in here, kind of average in my price a little bit, be protected by a lot more. So actually entering the trade down in this area, I feel gives me a lot better shot and a lot less risk. I can also enter with more contracts within my budget, which would allow me, if the price does react, I can start to take off some contracts. So I can kind of manage my trade a little bit different and maybe leave one as like a runner. I can move my stop to break even and hope that the market continues to push back up and I go for the big home run. So that's what my plan is down here. So I think to keep the charts clean, what I'll do is, yeah, we got this 15-minute. I got my white lines there. But let's go ahead. I'm going to remove that zone. And I'm going to say I'm not really interested. Can we get a reaction here? Yeah, definitely we can. Would this trade work? It might. We'll monitor it if it comes down here in London during the first 2 hours. But my area of interest now is going to be this area. Okay, so let's see. How can I mark this one out? I don't know if I got 5-minute in here. Let's see. Okay, I'll just rename the 15-minute as a 5-minute. All right. So now this is my area of interest, right? So I've taken a bigger area, more risk, and I've kind of brought it down a little bit lower. And I like to trade a little bit better because now if you see, even on this chart, where I'm interested in getting in is now at the POC. So now price has to get through everything, all these walls of defense, right? The VWAP, Asia Open, yesterday's close, POC, all the volume. Do I feel like good reaction there? Yes. We're going to try it. Okay. We got that area refined for an entry. Let's look above real quick. So remember, I marked all this stuff out above. I do have to go to yesterday because this is all yesterday's action, right? So if I look at the 5-minute, and so this area I marked out here was a 30-minute, right? And I had decided to take a 15-minute. So within the 30-minute, I'll kind of draw this out so you can see. I can explain it a little bit better. I'm going to go like same idea, right? So you have this blue area is a 30-minute fair value gap, right? Within the 30-minute fair value gap is a 15-minute fair value gap. Within the 15-minute fair value gap on this chart, I have two 5-minute fair value gaps. All right. I know that my risk on this one was like $200 on two contracts, which is starting to really push my budget. So, I'm always looking for ways that I can kind of bring the cost of a trade down lower and potentially give me like more control, give me more contracts to play with. Because if you think about it, if I get into a trade and I only have one contract, well, it's not a lot of management. It's going to be like one place I take a profit, or maybe I can trail it, for maximum profit. But if I have more than one contract, I can start to peel them off. I can take one for some profit, the next one for a little bit more, and then that last one, I can just let it run. As far as price wants to go, I'll just try to follow it and trail it and see what I can get out of it. So a lot of times my goal is to still try to take a trade out of an area, but try to reduce that risk a whole lot, right? So now the one thing I do still have to be cognizant of is when I look at this area, I knew that from my 30-minute entry and 15-minute entry, my stop loss would have to probably go up around this area. The reason for it is a few things. I know how price likes to hit yesterday's. So it'd be 2 days ago, the close, and yesterday's Asia Open, which is sitting right here, right? So that does put my stop in jeopardy for sure. I also have three areas on the chart from the options side of the house that I know is a magnet. So I know price is going to want to get up to this area where my stop's going to be, right? So what I can start to do is maybe reduce my risk even more rather than put my stop way up here and hope for a reaction. Maybe I start to think I put my stop around here. I reduce my risk. If it works, it works. If it doesn't, then I'm out. I'm not losing this whole block of price and risk. I'm just losing basically from here to here. So, what does that do to my trade? Well, it gives me a lot of options. I could enter on this 30-minute fair value gap. This was the start of an untouched area. If I go here and I put my stop just above there, that's $80 now. If I decide, hey, just don't really want to do that, I could see the price coming up to touch the 15-minute untouched fair value gap, which is here. And I see I also have a 5-minute there. I'm at $62. So if I take one entry there, and maybe I come up a little higher. This was actually my middle entry on the 15-minute, which is only 35. I could still take one there. I could take another one at the start of this 5-minute. Maybe my last stand would be the 50% of this fair value gap, $25, and then the final stop would be somewhere in that circle area. It'd probably be like a point or two above there. And because this is yesterday's price action and lower volume, it doesn't quite hold the same weight So either this area holds and there's a quick reaction out of it, or price is going to run right through it to hit these key levels. So for me, this is probably a better option. It makes the trade not so expensive. I still get a chance to get into it and take it. And if there's a big reaction out of it, it could be a very profitable trade. So what I can do here real quick, let me go back. Let me mark out. I know that I've got this 15 is also the same. So, is it worth maybe coming in one contract on this 30-minute? Because you never really know on these untouched areas, where does price really want to go and where's it going to react out of? It could be the 30-minute. It could be the 15. It could be the 5. You don't know. But what I'll do, like I did in the other chart, I'm going to mark out in white lines kind of where the 5 minutes fair value gaps in untouched areas are. Okay, so that way I have it. Okay, and maybe I'll mark out, I know this is a lot, but it gives me kind of a lot of options as price comes up, and it also kind of gives me a little bit of a roadmap or something to work into and kind of build a position out of if the price gets up here. Now I can also monitor this area like on a lower time frame, because if London gets some steam and it really starts to move up, do I want to take a sell trade out of there? Maybe. Sometimes it's good to see like the price really start to get moving, start to push up into that area, and then start to stall out and start making some doji candles. The doji candles are these ones here, like this green one, this black one, small little body, big wicks, right? It kind of shows you where price is stalling out, price is taking time there, people are trading at those areas, there's not a lot of movement. Where it scares me to get into a trade is when you start to see bigger body candles, kind of block moves, which we all know can happen any time of the day in the market. But if you start to see a whole bunch of these big moving candles coming at you, do you want to get in the way of that? Unless you've got a lot of confluence, may not be a good idea. Would I just take a trade based on like 30-minute, 15? Yeah, probably, especially if it looks like a decent area. Would I take a trade based on 5-minute against a big push up? Probably not, because there's just not enough there. So the more we've got going on the higher time frame, the better the chance that the trade will work out for you on a lower time frame. So, and I already know from looking on the daily chart, we're still at least short-term momentum down. So I would think if price gets up into this area, I'm going to have some kind of reaction. We're going to need to see, just like yesterday, and we have about 13 minutes, we'll get the range built out, right? The initial balance range. And we'll get a good idea where the targets are for the range. Like we already know where the targets are for Europe open, right? One target here. This one's hard to see because it's the same color. It's right in this area, right? Can be good reaction points. The price wants to just kind of stop and go sideways. Of course, price can keep going through, but a lot of times from what I see in Europe and London, I think we saw that yesterday where it tried to make a first move down towards a target, couldn't get it. And then it was like straight up, let's hit all the targets on the top side. And then later on in the day, it pushed down and started hitting targets. And then in New York, it hit all the lower targets that London and Europe made. So for me, these targets do remain in effect until London close, because these are London-made targets. And London doesn't close until 11:30 Eastern Standard Time. So, if you put initial balance on your chart, it's interesting to see how many times these targets get hit, just like New York initial balance, and how people trade that. The ranges in Europe and London sometimes are not quite as big, so we have to take that into account. But yeah, let's kind of see. We'll watch because we're coming up to the end of the hour and the initial balance being made, and then we can make some decisions. Does price come all the way back down here during my time with you today? Don't know. Not sure if it'll come up here either. I hope it hits one of them. That way I can get into a trade and, show you my idea. But maybe we have to look for something a little more short term within like the current area of price action for like some type of direction. And you can see, like I was talking about yesterday with this initial balance, that the halfway point for Europe is right here. And look at just the reactions off of here. It's pretty amazing. So if you see, like, if I go back here and we just look at the chart from here, and I'll start to kind of play this out. So Europe makes its initial balance, right? And what does London do? London opens, comes up, takes the top of the initial balance. So the expectation is for the market to keep going up. The expectation, it closed above that high of the Europe initial balance. But what happened? They brought it right back down into the zone. So now my expectation switches a little bit to the middle point. Yeah, it's not a giant trade here. You're looking at small, about 6.5 points to the midpoint. You would also be looking, if you took it to kind of the low area, 143 ticks. That's a pretty decent hit there. But you could start to play out the IB, where if it can't push out and hit a target and it comes back into the range, the expectation needs to switch to the middle point, the halfway point. At least it does for me. And if it gets past the middle point and closes below, and they can hold it down there, then your expectation is price is probably going to touch the low of the IB, which it did right here. You can kind of see it. There's other things on the chart, but this purple bottom is the low of the European initial balance. And London brought it down and hit it, right? So they couldn't get above it. They brought it to the half. And then from the half, they hold the price down on the 5-minute, and then wham, straight down to the very bottom. The range of Europe was 58 points. So there's trades in there. 5 minutes showing some of the action, but there's probably better entries on lower time frames, like 1 minute, 2 minute, maybe 3 minute. All right. So if we kind of step forward, we can see the price here in London pushed it all the way down. They take out the low of Europe IB. And then what do? They don't get past it. They just wick it. So now expectation, probably go back to the middle point, right? And not the middle point of London, but the middle point of European initial balance. So, and you can see they wick it, they bring it back in, they hold it, and they come back up and they touch the middle point. Now, the session middle point of London still being built out and will finish in 7 minutes. So you never really know where the middle point's going to be on London until they finish out their initial balance with expansion, right? So until that happens, I'm basing a lot of my ideas and trades off of the initial balance for Europe. So Um, and so you can just kind of see like it plays out over and over and over again. And yeah, there's trades in here. You can take these trades. So if you look here, can't get out above the range here. They bring it to the middle point. They can't get back above the middle point. They close below it on the 5-minute candle. Then the expectation is go take that below the IB. So boom, they drop it down here. They hit it. They sweep it with a candle. They can't close below it. The next candle, boom, right back up to the middle point. Right? What do they do at the middle point? Can they close above the middle point? No, they can't on the 5-minute. Right? They keep wicking it, wicking it, wicking it, and what happens? They bring it right back down to the European initial balance low again, right where we are, right here on the chart. So if I zoom in, you can see it really good. Right here. So boom, down to the low, back to the middle, back to the low. Now this is a really important area because, you know, if we're going to consolidate here, you know, this middle point and this range works like the range for the day, right? Your middle point is kind of your value line for that initial balance. So people below, it's going to be a little bit cheaper. They want to buy it, bring it back to that value area, the middle point of the initial balance. And it's the same thing above. It's expensive. Let's bring it back down. You know, it really plays out more when price is doing this sideways stuff and consolidating. The other things that are defending price from going lower right now are buyers here at the low of the initial balance, but you also have some option stuff down here, which can work as like a barrier. And it's going to be harder for price to break through these. But if the price breaks through these areas, right, and let's say it pushes back up, these areas will work as a wall for price to not get through to go to the bottom. But if price breaks through to the bottom, then these areas will start to work more as like almost like a resistance, right? They do work as magnets, but sometimes it's hard for price to get through them. So they'll touch them, and you just kind of have to see how they react. You know, do I take trades off those? No. They're just there for reference for me. Could it be a take profit area for me? Yeah. Because I know price is going to have some problems getting through those areas. So, you know, if I'm in a sell from up here, and this is all what if, you know, if I see, boom, I'm expecting price to get up, I can't, they bring it back in. You know, if you were looking at playing IB ranges, I'll get my pointer back out here. You'd want to have your stop up here because if price gets above you here, it's going to go up and take you out. So you want to keep your stop pretty tight up here. You know, moves to the mid. If you're going to try to play it all the way down here, or thinking, hey, price is probably going to go to the first target for Europe, which is down in this area, right? Around 215s. That would be the one thing that I would start to really try to manage my trade would be you have a fair value gap. You have all these different option areas, right? You have the IB low that you know gets defended by buyers. You know, can the price break through there? It can. But when you see a reaction like this, you know, if you're in a sell and you got in, we'll say around this area, you know, this black candle, you got in somewhere there, I would probably start to move my stop from the very high down to at least this candle, lock in some profit because you just don't know if the price is going to be able to push through here. Obviously, if it does, you're sitting pretty because once you see that push through and close through, you know, you want to take your stop from up in this area and move it down in this area. Just keep locking in more and more profit, or you just, you know, make a management decision. I see a lot of stuff down here. It hit the low. didn't close below the low, I just take my profit, which you could. And you know, you're in a 58-point range. You know, you got in here in the higher level, upper half, and you took it all the way down here. You know, you're looking at, you know, a 30-point trade, which is pretty darn good. So, well, that's good in my book. All right, so let's continue to watch. We got 1 minute until this IB range is set in stone. You'll see the targets come up, and we'll start to look at what can we do, what's the price going to do. My expectation right now is they're in the lower half. You got a lot of stuff going on here. We'll see where the targets come in. You know, the IB range of London is a little bit bigger, so that first target's probably going to be somewhere down around 10s or 12s. You know, it's going to be in this area. Could I see the price come down here? Yeah, but we really have to watch, because just like yesterday, you think price is showing itself, it's going lower. And okay, so it's at 10.25. All right, so IB is set. You see our middle points. All right, so my expectation is, let's move down to a target. Let's see if we can hit a target. That's really the big thing. So let's just watch how this price plays out. I usually don't take any trades within the first few minutes of the new hour. I think I mentioned yesterday, new hours can get a little crazy. And I get updates on my watch for financial juice, which are just like financial news, but also Donald Trump tweets. So it's a pretty good service. I got it going to my phone. So my, or not my phone, my watch. So my watch vibrates when something comes out, and it's just some more German economic news. So with news, I don't care if it's good or bad. The market reacts random to news. It's just a potential reason to push the market in a direction. So you have to pay attention to news, but on the fundamental side of news, I don't know if it really matters, to be honest with you. You know, because you can have consistent news, good news, and the market sometimes will react, big push up, positive, or the good news comes out and it just dumps. So to me, that's a gamble going on like fundamentals. So I'm purely more of a technical person, just watching the charts and watching what it's doing. So that is what I stick with here. So just taking a peek at other charts to see kind of what's going on. I'd like to look at oil. There's a decent move on oil. I'd like to look at gold too. So gold's pushing down right now. I had a gold trade yesterday towards the open. Worked out pretty well. All right, so I'm gonna probably give this candle enough time to close. You know, we got 2 minutes left on this one, and then I'll make a decision. You know, what am I thinking here? You know, and my big thing on my trading is I always want to try to get on the side of the momentum side, the side that's pushing, the side that's in control. You know, looking at the higher time frame, you know, the daily showing down, and it's down until it starts to close up. On the 4 hour, you know, it's reacting out of this fair value gap again. So that kind of reaction starts to tell me we could be going down. And on the 4 hour chart, you know, I got a pivot point here. I know price likes to touch those. That's about a good 50 points down or so. It's down here on my chart, 186s. On the hour chart, we're in a fair value gap right now. So this is kind of like crunch time. Don't know, does price react? The low right now of this candle, that low hit the 50% of the fair value gap on the 1 hour. So, but we don't know the final result of that until, you know, that 1 hour is closed. You know, does it eventually hold or not? We don't know. So, all right, let's go back to 30-minute. You know, we're definitely starting to move down. 15-minute, you have this momentum push up. Price could be coming down to challenge this area, value area high. Okay. Could very well be an area where price wants to come and kind of test. The price can get past here, close past here, then my expectations down. Next stop on the train down is going to be this area, VWAP, more targets, etc. All right, so we got to close outside of the initial balance. So one thing I could start to look at, this candle right here is not the greatest candle. It's more like almost more like a doji candle with a little bit bigger body, right? Does it give me a lot of confidence on a move down? Not really, because of this huge wick, but it does show some power to the downside because the buyers tried to push it back up to the middle, couldn't get it, and then the sellers took it and took it all the way out. Okay, so do I take a breakout trade to go to the target? And I think I mentioned yesterday, I'm not a breakout trader. I'm more of a price moves to a destination. I want to see like more move, more displacement. And then I'm the trader waiting for when the price comes back to the price where I want to get in. All right. So what I'm really looking for here is I would love to see if I'm going to take a sell on the 5-minute. I want to see the sellers come all the way down here, challenge this momentum move up. Okay. We've already had sellers push down one time, this move up. Let me go up here. This move up, sellers got below it, right? Then we were sideways, sellers pushed down again. The sellers need to prove to me that they're going to control London session. So I want to see the price move down and literally be able to get below this guy, right? Get below this good solid push up, which started Europe, right? Europe officially started here, but just prior to Europe, the first about 15 minutes before Europe, what started to push, right? So I know there's lots of buyers here. There's lots of stops here for buyers in this area. There's lots of targets also for sellers to get to down here. So, you know, I'm watching, can the sellers get to targets? Do they fail? You know, does the price, obviously it's hit the one target for Europe, but it still hasn't hit this target for London. And now that we have a London IB for me rules the roost going forward. That's the one I pay more attention to. It is the bigger one. And you can see we're getting reaction off this first target. This push out, if you're a breakout trader, you may be starting to question, is the breakout good? You know, it's like, is it going to continue? I know I would be questioning that also, because higher time frame momentum shows down. So that's in your favor. But shorter time frame, I mean, you can see since the open on the 30-minute, we've been moving up. 15-minute, you know, since around midnight, 11 o'clock p.m. Eastern Standard Time, it's been push up. So, there's a lot to take in here. And you can clearly see if you took this breakout trade, at the close of this 5-minute candle, maybe it does work. But if you put your stop up here, I mean, it's already coming back at you right here. And you got about 1 minute left on this. And this is like a really important candle because for me, I always watch these. Can the buyers that just stepped in close it back inside the IB range of London? But, I'm also thinking about Europe. And like I said, there's lots of stuff in this area that's a barrier for price to continue to move through. So now it's not looking so good for a selling breakout. And that's why I don't take them because I like to have the adrenaline of the breakout trade, but I hate having losses. So that's why I don't take those trades anymore. So we need to just watch. We've got 3 seconds left. Let's see what happens. So with 3 seconds left, the buyers moved. They pushed it all the way back in and closed it back into the range of both. So we're now really indecisive because we don't know what the price is going to do at this point, right? Buyers step in on this candle and push up, maybe. Sellers come back in. They get past this little buying action that just happened, maybe. Is this a potential trade area for me? It could be. And I'll give you an example. If the buyers continue to push up from here, because I know this looks a lot like yesterday, where London kind of moved outside of its lower IB range. It looked like it was going to hit the target. Let's see, maybe I can even bring it up. Let me go back to yesterday. Let's see, is the IB on here from yesterday? No. Okay, yeah, I don't have the historical ones turned on, so but I'll kind of explain what happened yesterday. Similar situation yesterday. Price got outside initial balance of London and had real hard time getting past it and wicked back in, and sellers got smoked because there was a candle that went up like 80 points, and if you were selling, you definitely got hurt on that one. All right. So now maybe a little different story today because we had the push out. I wouldn't take that initial trade. Push back in, which starts to make me question expectations. Maybe, the close back in could start to really signal a move back up. But now you can see this 5-minute candle really starting to push down. So I could potentially have, a trade. I'm still really focused in. I don't really have anything on higher time frame, by the way. So I really need to. I'm going to take a trade. It's going to be based on higher time frame momentum. But the sellers have to show me they can continue to push down. Like right now, they came really close again to that target, but not quite. And that's important news. That's important information because I already know there's buyers here because they pushed it up. So there's buyers in this area that don't want to see this price come down. So, they're going to try to defend this area the best they can. And do I think the sellers can grab that target? Yeah, I do. But is it a trade for me? No, it's not, because this action in here is really bad. It's overlapping, and I don't have like that real nice, clean kind of push out, up and out. And I don't really have it on the buy side either. The closest thing for like Buy entries was on the 30-minute, but I didn't like any of this action in here. And the reason for it is even though that indicator shows like these order block type setups, a lot of the price actions overlapping. So like you have, like for this one, for instance, you got this zone created on these two bars, but then the next candle comes in and it like eats up half of it. So do I hold a lot of weight in this one? Nope, I sure don't. You know, I want to see these zones like created where they're made and the price just pushes from them and never comes back and touches it. That's where I'm looking for more of a reaction. Um, so like this one on the 15-minute was close. It was created, it looks like from these two candles, and then, you know, you get this push up. But the problem, like I wouldn't take this one just as like a pure come back and look for reaction because I know the price has come back in once, twice. There was a fair value gap here, reacted once. So for me, the fair value gap trade was probably a better option to take a buy out of. Um, so I don't know. We'll see. You know, a lot of that's hindsight, what if. So we have to pay more attention to what's going on right now on the chart and get a good idea of what the charts are telling me because that's the way to trade. Don't go with the I think it's going to happen. You can have expectations of the price moving, but to take trades on I think or expectations can sometimes get you in some big trouble. So uh, we'll let the chart clearly tell us what's going on. I already have two areas I'm interested in if the price can get there. And who knows, it may or may not get there in this session. Um, it may be more like pre-market New York or in New York, but clearly my sell areas are within London target range. And funny enough, I think just like yesterday, these all lined up. So if you check this out, the topside target for London, like my first entry reaction area, is like at the really close to the 125 of the target of IB range. Very interesting. So, you know, I know price will want to come up here and probably get these targets if they can get it past the middle point, they can get outside of the range. They're going to come up here and hit this. But I also know I've got that fair value gap on the 30 that's not touched yet. So price wants to come back, touch that. You know, do I get a reaction from it? We'll see. I'll take that trade if it comes up here. But we'll be watching. For purposes right now, you can see, and I'm going to wait until this candle closes. We've come back into the range. So my expectation, middle point, right? They closed out, came back in. My expectation switches to middle. They close back out again. My expectation now is first target. They couldn't hit the first target. And now what are they doing? Brought it back in. Now, if this 5-minute candle closes in here, in this range, next destination for me is going to be the middle of London. So I'm looking more at the cyan color. Can I get a trade out of here? That's possible because, well, a couple things. You know, this is my main area of interest. Like, I really wanted to see price come back down here, get to this area and challenge this to see seller's going to be in control or not. They couldn't do it. So now I'm looking at this candle and it's touching what's called the session mid. The session mid is just the 50% area of the range of that IB. So for instance, the session mid, and that'll move throughout the day as London expands. This is the 50%, and I can draw it on a fib. If I take the high of London to the low of London right now, see the 50% here in red? It's the session mid. So it's like the range of the London action so far, it's right at the 50%. So if I'm thinking down, a down type trade or sell, good areas above 50%, it starts to get more expensive. People want to sell this thing. So you've got the golden zone type entries just above the 50% area. You've got this area, which is like my last resort area. If it gets above here, we're probably going all the way to the top of the range. So I know right now where we're at with this session mid is a super important area. And a lot depends on, do the buyers continue to show strength, or do sellers push this all the way back down and we keep doing, which looks like train tracks. So right here, lots of stuff going on here. Option stuff, the lows of the IB mids. So you can see right now, this is really ugly price action, right? You've got sellers, buyers push back in. Now we're going to see what happens. So I think it's all about being patient when looking at the charts and coming up with like manual trades like this. It's critical to wait for your trade, wait for the price to come back to where you want to trade. For me right now, the indication, the expectation is a little bit more on the buy side. And I'll tell you the reason why is sellers couldn't get to their target. Buyers brought it back into the range. Sellers tried again, couldn't do it. Buyers brought it right back into the range. And on this last one, the buyers, if you look at the candle, the momentum of the buyers, well, they got a little bit above the sellers here on this candle. So right now, if I'm like weighing, or let's say I'm scoring a boxing match, I'm going to say right here, this action right here, the buyers are winning this round. And my expectation is for the price to probably, let me grab my little circle again, come up and challenge the last kind of control point of the sellers. Just like this is kind of a control point of when the buyers pushed up. I'm looking at, well, where did the sellers last kind of control and move down? You have this area, right? The buyers moved up, hit the 50, boom, sellers stepped in, they pushed it all the way down. This is critical area right here. Because if the buyers can get above this, then my next expectation is probably going to the top, right? But it's all on, can the buyers close above the middle, close above this fair value gap? You can see they're reacting from this fair value gap right now. And let's put on that fib again. So the Fibonacci, if you're a golden zone trader, and I know, the ICT trading, you're looking at the optimal trade entry area. I don't remember exactly what it is, 61.8 or 62 or 65. It's an area. This would be where the retracement from the top move to the bottom move and come back up. This is where the sellers would be stepping in. So the fact that we're getting some reaction here, not really a surprise for me, because you got a zone where sellers are going to sell from. You have the 50%, right? I know there's sellers and buyers here waiting. So yeah, seeing reaction here. Not a big surprise. So move to next expectation. Buyers hit this area, right? This is the last point where sellers kind of push down. So far with, well, we got about a minute left. The buyers, well, there they go, right there. Look at that. Boom, hits the top of the IB. All right, so I have to be ready. This is almost like yesterday. Yesterday we had a 80-point run up in a matter of seconds. This one, this move from down here to up here is about 90 points. So let's look at this candle because this moved fast. You're looking at about 70 points move. But let's see where it shakes out. Let's see where the buyers close this thing, right? Now, do I want to take a sell seeing this big old candle moving up? Nope, sure don't. So now I'm going to go into a little bit different mode. I'm going to go into the mode of I'm going to be watching for sellers to step back in because it's absolutely insane to try and take a trade against that move. You'll get killed on a sell trade. Now you can see this could very well work out. So I had entries all in here, right? So let's just kind of look at this. So where would my target be legitimately? It would be first target is going to be the IB high, right? We'll see if the sellers can come back and touch this. That's kind of the first common sense target. So you can see London came up. It hit Europe 125, London 125, Europe 15, and London 15. If they come back and hit this would have been a winning trade if I would have had a resting order. But okay, so that would have been a winning trade on the sell. So I was looking at engaging out of this area. I had refined my entries to these white lines. So these first two would have been good. And I had talked about entry here with a stop right above that. Remember, to reduce my risk. So, you're looking at from this entry would have been close to, $50 type profit. From this entry, you would have been looking at $67 profit. So, that was about $110, $120 profit on that trade. But the price action right now is a little crazy. We don't have any news right now that I know of. I haven't heard of any tweets or anything. But it's the same situation here. But now you got to really give more advantage to the buy side of things, right? Because buyers not only took out this area, they also took out this area. So as of right now, buyers are in total control. Let's go ahead and take off areas that have been engaged. Am I interested in any more sells up here? Probably not. And the reason being is they've come up, they've run into this fair value gap area. So I'm probably not interested in taking any more sells at this point up there. For me, it's kind of a one-time reaction, and that's going to be it. Now I'm thinking if the buyers can step back in, keep this up. Next stop, this area up here, you've got all these areas which are going to really work as more like a wall to price getting through, but they also work as magnets. So price is going to be attracted to getting up in here. Could also see price at least coming to 50% of this fair value gap or completely filling that. And this orange area is the indicator basically saying that's like a supply demand zone. And if you look at it, at least on the 5-minute, you could say, I'm not going to get too far into this, but you could say that this green candle, which creates this zone, is kind of an order block. So if price gets back up here, would there be a reaction from it? My expectation is, yeah, there probably should be, because this order block, this solid green candle, which is like the last solid green candle that buyers were involved in and sellers pushed. There's going to be a lot of sellers in this area defending this, right? Risky trade in this area because you've got 2 days ago or yesterday's close in here. 2 days ago? Yeah, 2 days ago, the close in here. And you got Asia open from yesterday right here. Price loves to touch those. Whether they do it in London or New York, you don't know. But let's go back. Let's see if we can get some kind of trade going here. Okay, so here's my idea. Maybe it's a crazy one. Well, all right. It would be really nice. You got 1 minute left. All right, let's see. Let me turn off something. I've got a gold trade going right now too, so I have to watch that. Okay. Okay, so here's what I'm thinking. 15-minute candle, it's not the best looking candle. Neither is that 30-minute. But it does show that the buyers got above this kind of move down on the 30-minute. So that's important. On the hourly candle, the fair value gap's holding, but price is having a really hard time getting above. The indicator says it's a strong high. Looks like it wicked once, twice, could be 3 times. But, my expectation now is for that price to come up to that one entry and fill that gap. So my entry for a sell kind of becomes a target on a buy, to be honest with you. So do I like this area? On the indicator, it made a buy zone here. It's not too bad, and the reason why is it's a pretty good solid push out. It's pretty clean, right? It took over the last part of the sellers here. On the 5-minute chart, super push out. We also get into fair value gap, right? So you've got fair value gap 50 right there. And you got the start of the 5-minute fair value gap kind of in the same area as where the 15-minute says there's some type of, good setup. You also have the midpoint, which is probably going to be defended more by the buyers because the buyers are pushing up, right? So if price comes back to right here on the 15-minute, I would look to engage that. We can look to see what's the risk on this. Okay, it's $88, so it's within my budget. Is there a place where I could come in with a second? I would consider down there where it says consensus call ×2. That means there's 2 important levels on the options. Could be a magnet, but could also be a point of defense and a reaction point. So the price gets back down here, it could react. So one here, average in, puts my price right around this area. I can target the middle zone. I could target the session midpoint, which is the halfway of the range. So that's going to be what I do. So let me set up a custom here. Let's go 180. And maybe we just, for right now, I'll try 125 on my profit. I'm going to drop one here. Okay. I'm going to come down here to, we're on the 5-minute chart. Here, I'll kind of highlight the area. It's kind of where the buyers started to push out, consensus call area. And we go to custom again. And this one, I'm going to put stop loss of about 95. And for this one, I would hope if this one engages, we at least get back to this middle point area. So for this one, I'm probably going to put in like 100 as a target, and I just have to manage it. So now what am I doing? I want to get in with the buys because the buyers are in more control right now. Yeah, it looked like the sellers were in control. They couldn't get to their target, and then just like yesterday, the buyers just, holy smokes, it just pushed up like crazy, right? So, but I'm not gonna hop in any kind of crazy breakout trading. You might have been able to get some type of target on this breakout, but it didn't sustain. And if you're waiting to like, okay, I'll get into this breakout after the candle close. Well, if you got in right here, man, this thing retraced all the way back down. You know, you're in like super drawdown right now. So how you take a breakout, I know everyone's different. They may actually have like just a buy order waiting here and hoping that price breaks out. That would have been probably the only way to win that, at least short term. Longer term, if you got in, say up here, you're already hit $100 in drawdown on one micro, just with this pushback, with the hopes it's going to continue up. What's my expectation? My expectation, it's going to continue up. But price always likes to retrace too. So we just have to wait and see how this plays out, But right now, what I'm looking for, and it might actually make a little more sense on the 5-minute chart. If I go in here, I dig in here a little closer. It's probably closer to that thing. You've got this fair value gap, right? It was created on this big push up. Price came back down. Here, once that price came back down, this fair value gap was created. The next candle dipped into the fair value gap, didn't get to the 50% and pushed out. What I'm hoping for is that price comes back down, tries to fill this, tries to challenge the middle point, and gets into kind of where the buyer stepped in and really pushed it out. I'm hoping to get on board with, at least short term, the buyers. Where would my target be? Well, we'll have to see if I get into this trade. But my first thought is when I put an entry on the chart, I'm really expecting the price to touch that. And I still have this one up here. And what is this one? Well, if I go to the 30-minute, it was kind of, I don't know what you call it, like the point of where this fair value gap would be completely filled was going to be an entry for me to sell. So my expectation is if the price can move up, it's going to want to fill that and close that whole fair value gap out, that whole imbalance. And if it does, that entry there could still technically be a sell entry. But right now I'm thinking more as that's a target. If I can get into a buy, that's going to be more of a target for me. So we just have to wait and see. I'm waiting for the chart to tell me something, show me something, give me good indication of maybe what's going to happen here. But um, not a lot of money risk on the table on this trade. Um, I feel like I'm on the side of at least short-term momentum. My stop is going to go down here. Unfortunately, it's going to be closer to the target for London. And targets on the upside have already been hit. So, they want to come down and hit this bottom one too. But I have to hope and really kind of rely that the buyers step back in, that they show me some strength here, and that strength will return and the buyers will return out of here with at least some kind of reaction. Um, will it be a good big money trade? Who knows? We just got to wait and see. So, just taking a look at a couple other charts that I have going. I have some other things that I kind of put on the board. Start of the day. Just watching those kind of play out also. So kind of managing a few things as we go today. So um, this is funny. So look at how close the price got to my entry. Now I wanted the entry right here. Price came down, touched the 50%. So it may not actually be the area that I'm hoping for my trade entry. It's looking more like buyers were waiting at the 50%, which, am I mad? No. So far, I mean, the price could just skyrocket back up at this point. You don't really know. But you just have to take it every day. So we'll see if the sellers come back down, touch my entry, or the buyers continue up. Buyers continue up. I just have to continue to monitor the chart and see. Now what I'm looking at on the 5-minute, and could be another entry, is right here. So you get the big push up. Sellers came back in. Buyers tried to push it up. They couldn't really do much. Sellers came back in, right? So if the buyers can get back above the sellers right here, then I might be looking at some type of buy trade to go all the way to the top. So that's kind of my thinking. Just trying to watch candle per candle, see what the charts give me. Just adjusting one thing on gold trade I got. All right, let's see. So we're just kind of holding pattern right now. I'm waiting, price kind of going sideways right now. At 9:43, so we're gonna have a 15-minute candle close here soon. 5 minute candle. Like I'm really watching on that 5 minute candle where the price is gonna come up to this area. You know, what does it do right here? Could it give me another entry? Yeah, it could. If I see buyers come in super strong right here, they get past this move that the sellers tried to make. What's going to end up happening is the buyers will move past here, potentially closing outside of the IBs of London and Europe. So my expectation will switch again for an entry point um, to maybe taking a buy from this area. So what do I want to see? I want to see the buyers come in, push that, right? Push past, close above the IB, come back to the IB, and then I'm going to try to take a buy. That's my plan. So, in a moment, just closing out of a gold trade that I had. So I think I mentioned yesterday um, to everyone that the concept of what I'm doing for NASDAQ works on everything. Works on gold, works on oil, works on ES. Um, so you can take higher time frame charts, daily, 4 hour, 1 hour, 30 minute, 15 minute, 5 minute. You can trade gold. Do the same thing. Literally the same exact thing. And can be completely successful doing that. Yeah, it's pretty amazing. I like this concept. Does it work all the time? No. And I think that's why you have to keep your risk in check. You know, I think that's where you can really get in the weeds and some problems if risking too much, trying to average in too much. You know, that's the main reason why I have a budget when I trade, because yeah, I can get into multiple contracts if it's within my $200 budget for a trade. But what I don't want to do is get into multiple contracts when I know one contract costs me 200. If I start to try to average in with more contracts when I'm already maxed out on first contract budget, then, you know, if I lose that trade, then I'm looking at a super loss. So, um, you know, that's just not a good plan. Um, so I'm always watching to see where am I at with my budget. I have I'm trading bull knocks again today on this account, but I have on another computer over here, I have a take profit trader account, um, funded account, and um, one account getting, I think I'm 200 away on passing that one. Looking at a gold trade, I took a buy from the lows that the gold's at right now. So that was a win for me. Yeah, so just watching everything, see how it goes here. Uh, okay, here we go. Buyers pushing up. All right, so my next plan now, will I leave these trades on the chart if I enter into a buy at a different area? No, I'm not going to. And I'll tell you the reason why. Um, this candle, this big up move, is a perfect example of why I don't leave trades on the chart. So if buyers step in here, give me a different reason to enter a trade, I'm taking these off because at any moment's notice, the sellers can do the same exact thing that the buyers just did, right? So if I have these on and I have more buy trades on here, it's going to go through all of them. And what I just did essentially is instead of $200 risk budget for a trade, I could potentially lose the first trade, get entered into the second trade almost immediately, and in one candle lose multiple trades and sometimes multiple max risk on my budget. So, if I leave all these trades on here and one crazy tweet comes out or something happens or news, you could lose all sorts of trades. So what I always have on the board at any given time is what is closest to the action. And that's what I have to do. All right. So what I'm looking at right now, we're still kind of pushing up. Really want to see these buyers close this candle above London IB would be great. Above Europe would be great. My next trade option is going to be right in here in this area. If the buyers can, I really want to see the buyers get above the sellers of this area, right? So where would I be looking for an entry? I'd be here, it'd be here. So, all right, for now, I'm going to take this off. I'm kind of moving quick here on this one. So $60 there. I know this entry is not going to be quite as much. Oops, quite as much from this one, right? I'm looking at 70. All right, so we're gonna test it out. We're gonna see because I really want to get it a trade in for YouTube. All right, we have first entry right here, right? Buyers just push past the sellers. Like it. While I have time, I'm gonna come down here to a smaller time frame chart and see, do I got anything else? I got a fair value gap on 2-minute. That's a good entry to possibly come in on an average. There's another one that's the 50%. My current entry is really close to the fair value gap that was just created. Now the sellers on the 2-minute already tapped into it. So I don't know if they're going to come back or not. They may not. I may have missed the trade. On the 1-minute, I do have this area in here, which, sellers came down, buyers pushed them out. There's on this chart, it's showing a change of character and a structure shift. But I'm going to stick with this. I want to see the price come back, tag me in. My stop loss, not in a really great place, is going to have to be below this action. So we're going to be down in this area, which happens to be my entry point of my first trade. And like I said before, these can turn into targets. They can also turn into entries, places where I want to trade. That's usually what I'm marking on the chart. And they kind of work both ways, places to get into a trade, but places to also get out of a trade. So we'll see what price does. So I'm going to be looking at, hopefully the buyers can keep up the move up. Now, I also have to be aware of the time. So we're getting close to the end of this session. And just like yesterday, the time in London and Eastern time coming up to 5 a.m. 5 a.m. is always like a time potential reversal. Where would the reversal come in if it were to play out? Well, right now the buyers are in control. So in my mind, I'm thinking that at 5 a.m. Eastern Standard Time, 10 a.m. for me, there could be a move down. And how far that goes, you just don't know. But sometimes, new hour, and specifically at that time, London likes to pull a reverse. So, and clearly London so far has been up. So the reverse, if it plays out, probably going to sell off. We're going to come down. So, I'm going to keep my stop loss tight if I get into this trade. I don't want to risk too much because if that 1 hour does play out and it reverses, then I probably don't want to be in the trade. So I'm going to move my stop up. It's going to go just below that candle right there. And my target, my expectation is if the buyers are truly still in the game and they're really here, that they can at least go and take the high, right? So my target is going to go basically right at the high, all right? So I think I'm probably pretty close to like 1-to-1 on this. Let's see. 142 ticks top side. Let's look on the lower side here. I'm looking at, oh, 142. Perfect. 1-to-1. So I feel like I'm kind of in the middle of this move. So let's see if it plays out. Now I did talk about on the 2-minute time frame this fair value gap. 50% of the fair value gap is always a good kind of reaction point. Where it was created is sometimes a good reaction point. Now, if the price closes below here, that would technically be called an inverse fair value gap. And then the expectation switches. Then the target becomes where my stop is. So I'm really hoping the buyers can hold this fair value gap. Otherwise, it puts this trade in jeopardy. Now, what I could do, because my cost right now is only $70, right? I'm well below my budget. So if I come down here and I say, you know what, maybe I take an entry here at 46, that's still, just over $100, 115, 120 maybe. And then it gives me a little bit better potential to try and manage this. So I think that's what I'm going to do. I'm going to hope the buyers are still here. I'm going to hope that the new hour candle doesn't it doesn't kill me. But this one I'm going to actually put in a custom. We're going to go 180. So this one's going to be more like a 1-to-2 target if it holds. All right, so we'll put a buy limit in right there. Let's go back to the 5-minute. So we know this is like a 2-minute fair value gap right there. So I think one thing I'm going to do, I'm going to make it one small little adjustment, and I'm going to move, let's see, 56. I should probably have my stop just a few points lower, just below this fair value gap on the 5-minute, just in case the price comes down and wants to touch that. So let's go. I'm just going to adjust it just a little bit because I kind of missed that point. Okay. So let's see what the buyers can do. So 3 minutes until the end of the hour. Maybe we get a big push going into the new hour. Maybe it comes back. We just don't know. It's the drama of trading NASDAQ in London. So now I will say, if the buyers can step in, really start to push this, and I see some good strength, then I'm thinking I will move my target to that entry point I had. Or I could think about how else would I want to manage it? Well, a good area of reaction are these 50% levels on fair value gaps. If they're going to hold, probably going to hold there. But I know they like to get touched. So I'm going to move my target. If the buyers can come in, really push it. This is a 5-minute fair value gap right here in this like orange red color. And I'm going to put it right at the 50 of that. And that's going to be my target, because I know that the price has already come in, the price has already touched this 5-minute fair value gap. I know the price is attracted to all these things up here on the 30-minute. So if the buyers can maintain and keep pushing this, we got a couple minutes before the new hour. I don't see why, in expectation, why the buyers can't at least get to here, right? Like, this is the only thing on the chart, except for right here, it's a challenge point. You know, there's going to be sellers waiting here. The seller stepped in here to push the price down. Buyers should at least be able to get to here. But ultimately, I'm thinking, here's my next area where sellers are at, waiting to push this down. Buyers should at least get up here. Ultimately, I think they get up here to my entry. So, all right, what I'll do, we got a minute left. Things can get really stupid and crazy at the new hour. So I'm going to take this entry off. Right now, I'll move my stop to here. A little bit in profit because I have expectations of price reversal at new hour. So why not play it a little bit safe, move to break even, don't take a big loss, and we'll see. Does the price reverse here? Like I'm thinking it can. And there it is. There's the move to my break even. Now I can still get in to a buy if the buyers can push this, right? But this is always like a big thing, right around 10 a.m. Eastern for me, or 10 a.m. London time, 5 a.m. Eastern time for New York. So they came back down, they touched that IB high, right? So now if the buyers can get back above here, I have another entry. And I still have my entry from the 2-minute fair value gap sitting here, right? So I'm starting to build out a potential another buy trade. If the buyers want to step in, if there's not going to be a potential reverse on the hour here, the buyers step in and they want to show that there's still strength, then the next area I'm looking at, this is like the challenge area, is this in here. So the buyers showed some strength on this candle, but they couldn't get above the sellers that were in this candle. If the buyers right now can get above here and they get up into this area, then what I'm going to do, and I can show you exactly where, my entry is going to be right in this area, right? I got a choice on my stop. If I go to below this current and I move up, you know, it's pretty cheap. It's like $50. If I want to go back down here to my original, it's 100. So coming down here, you know, I would have one average in point to hit to the stop. So these are all decisions on, you know, how much money do you want to risk on these trades? You know, at this point, they defended the IB high. There's really no reason for them to come all the way down here. If they start coming all the way back down here, then that reverse is probably going to play out on the new hour. So we're 2 minutes in, just kind of going sideways here. So honestly, what I would do, I'd probably enter just one trade, and I would be looking at doing something like this. If the buyers step back in, I would be looking to get in, not on a breakout from here, but I'd be looking for the buyers to push out, come back down to this area where I want to get in, and that's going to be my buy. So I have to wait a little bit and see what plays out. But at this point, because I'm still in that new hour time frame, I'm not really interested in taking a buy from this. And the reason for that is this is based on a 2-minute fair value gap entry. And how much weight do I put on a 2-minute fair value gap entry? Very little. So really what that was more of a refinement, something that I could reduce my risk from on a higher time frame. So that's what that is. Up here, this is based on higher time frame. This is based on super low. These two entries down here are based more on 5-minute, 15-minute. You could almost argue a little bit of the 30-minute price action. These are better entries for buys down here than this is all by itself, right? So the only entry for a buy I'm interested in right now is if the buyers can push this right now, right? Maybe they let me bring this up here real quick. So my little arrow line here, buyers push this up right here. Sellers can't get below the buyers in this candle. So kind of giving me indication we got some strength. So I will enter right here. Like I said, buyers continuing to push. I stop just below this candle I talked about, and that's all I'm going to go with. My target, 50%, 5-minute fair value gap, and we'll see what happens. This is like $50 risk. Last trade of the session for me. First one was a break even when the price came back down, and it's just about being a little bit cautious and my expectation from previous trading has always been this time frame can get super dicey with reversals. And do they always play out every day? No. But sometimes they do. And sometimes you can clearly see on the chart that the 5 a.m. Eastern Standard Time London reversal is a real thing. So, but right now, it looks like buyers are in control going into the new hour. So maybe that reversal plays out, maybe it doesn't. Sometimes for sure, or a better estimation if a reversal is going to play out. If you get past 10 minutes past the hour, if the price is still pushing, the buyers are still pushing hard, still closing above, reversal is probably not going to happen. And the key point I'd be looking at is right here. Do the buyers close above the sellers that push this down? We'll know in a matter of 3 minutes, like right here. If the buyers can't close above here, this is probably a losing trade. The buyers close this thing above the sellers here. This is probably a winning trade. So let's see how it plays out. So now, if this gets close to my target, I'm not going to give this whole thing back. If it hits this high, hits the high, I'm going to move to break even again. But expectation is for the move to continue to happen. The buyers should keep pressing, keep pushing, keep buying past the last highs that were made. If they can't do that, it's a warning signal. Sellers could be starting to take control and you could be looking for a reverse. So 2 minutes in, and so far it's in a little bit of profit. Maybe the buyers come and do one of those last things and take it. There it is. Okay, so that was a win. Let's see if it hits the target here. Remember, this was my entry for a sell, but because the price already came up into this area and reacted, which actually would have been a winner, but I didn't take it. Now, buyers pushing up. This for me is dual use. This is a target for the buyers to hit. because I think it's an important entry area. It could potentially also be a sell, but the sell becomes much higher risk because you can clearly see what higher time frames doing. Do you want to get in the way of that? That's what you really have to ask yourself. Um, as we start to look at 4-hour candles, good solid push up. Next, solid push up. Where do I think this candle could end up? Well, most likely going to challenge where the seller stepped in up in this area. This is probably the next point right here. So where does that fall on the chart? So I just marked that on the 4-hour chart. And if we look at the 15 and the 5, that puts it up here. So, buyers keep pressing this. I'm thinking they're probably going to move it up to this white line, right? Well, the white line, if you remember where I was looking to take a sell when I was talking about this earlier, I was in this area. This was based on the 30-minute and 15-minute chart before I kind of got a better entry on my 5-minute. So this was going to be my area. And I remember talking that my stop would have to be right above this action. Well, now based on the 4-hour chart, what I'm thinking and the big momentum buys coming in, push up, right? I'm thinking this price, let me grab this, continues to get up to here, right? Well, my stop would be here. I'm now expecting the price to go past my stop. So this could still work out, this entry here, just based on a couple things. So momentum, higher time frame, still on your side. It's still down until that daily closes above yesterday. 4-hour, yeah, it's showing pushing up, but still kind of not clear. We can revisit the 1-hour, right? Because we have a 1-hour candle that finished now. Well, the 1-hour is clearly showing some bullish action, right? A 1-hour candle closed above the last hour. I think at least short-term bulls are in super control. Next resistance point, if you want to look on the 1-hour chart, I think you got a couple things just to kind of finish things up here and analyze it. Couple things, and then I'll finish up my talk for the day. Couple things. So let me get to a good view here. So you can see, you've got like this big candle down here from New York Open yesterday. Buyers never could get back above that. Open candle went sideways, sellers stepped back in, pushed it down, right? So you might have some sellers right here too, because the buyers tried to come back, and this is on the hour chart. Buyers tried to come back up, push it up. You couldn't do it. Sellers stepped back in, dropped it all the way down. So two areas on the 1-hour chart to start to really pay attention to is where the seller stepped in there, and finally where the seller stepped in here, and where the seller stepped in here. So you got 3 areas, right? If the buyers are in control right now, then my expectation is they keep pushing this to the next point of like control that the other side has. So the sellers got in control here. Buyers have been in control all day so far. So where will the buyers have trouble getting through? Well, it's probably going to be in this area, which funny enough happens to be a purple line, which is a previous day close, right? So let me drop that in right here, right? So this area, let's see, I want to make this kind of clear. Let's see, do I have a, oh wait, let's try that. Yeah, okay. So I'll put that on the chart just as like areas where buyers are going to have problems getting through here, right? Potentially be a sell entry because I know there's sellers here. The next, let me copy this. We'll come up here to this line up here, right? Which was previous day high in Globex. So Asia, when it opened yesterday, pushed it up to here. Chart's basically saying this is another area that could be an issue, right? If you want to refine it even farther, you go right to the kind of the top of that candle. So these are areas, they're not specific points, right? And then the last area is up here. And I already identified, I'll take this off. This was from, I think, the 4 hour. Which it's funny enough that when you look at where higher time frame charts start to show you where things can happen, right? We were marking things out here. So I've got right here where I saw, oops, oh, that's not gonna let me drag it. Okay, I don't want my charts to crash here. Anyway, this one where I saw, 4 hour where the body of the candle started, where I know sellers are really there, right there, 92.50. If I look on the 60-minute, 92.50 is Asia Open from yesterday. It's funny how a lot of this stuff matches up, and you start, looking at higher time frame charts and putting areas of interest on there, key levels, and you look back just a day or two, and you find out, wow, that was really an important level. Maybe not for just what the chart's telling you in price action, but also key levels for, institution levels, like the opens, the closes, prior day highs, So reactions from these area, highly likely, price is going to have a hard time getting past here. If anything, it'll go sideways. Do you want to blindly take those sell trades from those areas? You can. I think if the price is showing you that it's just not going to drive completely past your level, you just have to be careful, like good example is like New York Open yesterday, this big down candle, or is that 2 days ago? This down candle, if I'm, let me go back here on my chart. So, you got this push up. This is from the 21st. Kind of looks a little like today. Asia opens, prices pushing up, and then New York opens and pushes down. Well, one key thing for me is that even though Asia and London in this specific point of the chart right here look bullish and pushing up, New York Open, I always take my trades off because you just don't know. Market could reverse. When it reverses, it can reverse with some fury. And, if I'm thinking, I go back here, and this time frame is 3 o'clock, 4 o'clock. This time frame right here is London, right? And London looks bullish. And I'm thinking, man, if price comes back here, I'm probably going to buy it. But then you look at, oh my God, New York just went wham right through it. And where did New York go? So here's exactly what I was talking about from today. How New York always loves to come back to previous day close in Asia Open. Here you go. Here's London. You're thinking buy, buy, buy. And then you come up here and boom, here's New York Open right here. There's one candle. Comes all the way down, takes out all the buyers from Europe and London, comes all the way back down. And where does it go? Perfect target of Asia Open, yesterday's close. So just food for thought that, would I want to um, leave trades on the chart when New York opens? No, because so many things change session to session. All right. Well, I think that's going to do it for me. I think today was a good day. Yeah, not super money. I wanted to take a couple trades just to show you. It's funny. It's coming up right now, coming up to that entry point I was talking about. You know, may not be around to see if it reacts, but could be a point of reaction to sell back down. Where would I look at the sell back down? Well, probably come back down to kind of at least where some sellers are located. Some, I'm trying to get in the mind of where if a seller gets in here, or let's say there's still sellers here, price reacts here, the sellers that are in here that are now in drawdown and maybe still holding on, they really want it to get down here. So if there's going to be a reaction here, use common sense. Maybe IB high of London, maybe the middle point. But whether or not the sellers could push from here all the way back down, take over the buyers and really start to push down, don't know. But I could see sellers at least trying to get it back to this IB high with the hopes of the sellers that are in here can maybe get back into some kind of profit or unload. If they can't, then the buyers would absolutely regain control and really start to push at that point because the sellers would probably give up. All right. So I know I don't mention this much in my stream, but this is all I'm doing right now for my job. I'm trying to build the channel. So any likes, thumbs up, subscribe really means a lot to me. It gives me an opportunity to maybe make some kind of income from that side of the house. I do a little bit in the trading. I'm not super high risk guy. You know, you don't see me take, $1,000 trades. That's pretty rare for me. I keep it kind of small. Try to stay in the game as long as I can. So you can support me by using a coupon code if you find this valuable. I think I cover some stuff that uh, maybe some other YouTube people really don't cover or think about. So maybe you walk away with a little tidbit that changes your view of price action and what the candles are telling you. Because I don't really look at patterns. I don't really look at anything. I'm just looking at what the chart's telling me, and hopefully someone out there can use it to make a whole lot of money. So yeah, so like, subscribe, support me with my codes, coupon codes. I've got Bullnox, Blue Sky, Funded Next. They're all great companies, and have had payouts from them in the past. Don't have any issues with them. So if you're in the game, you know those names. So thank you for your time. Thanks for stopping by today. I think we're doing good. We're off to a good start so far in this new journey of streaming. So if you have questions, leave them in the comments below. I'll try to answer them. And wish you safe trading the rest of the day, and we'll talk to you tomorrow. Thanks, everybody. Bye now.